So please welcome Meryl to our online stage while I'm passing the presenter rights to her.
Thank you, Anna, and thank you all as well for taking time out of your evenings. Very much appreciated. I'm sure that you have families and social commitments as well to attend to, so I really appreciate you spending your time with me today. And Anna as well, a special thanks to you for having me present.
Oh, it's a pleasure, and thank you for making yourself available. Because I know you have a very busy schedule. Yeah. All right, over to you. Thank you.
Thank you. And I know that you already did the acknowledgement. So I just wanted to add to that acknowledgement and say that, I really do love acknowledgement of country. And I think that it made me reflect on when I was going to present today to say that we also need to acknowledge ourselves and our capability to drive, positive change, because it all starts with each of us, even in government, even in big corporates. It starts with one person just making that choice to take, positive action and drive important change such as sustainability. So yes, thank you all for being here. This is that choice that you're essentially making in being here in this session. So I will share my screen as well, and I like to just keep it pretty casual in the sense that feel free to ask me questions along the way and just interrupt me. That's absolutely fine. Just to check as well, you are able to see the screen where my mouse is moving around, and it's the yeah, good. Amazing. Wonderful. So yeah, so Anna gave me a little bit of a background about the group and the people that are here attending today. And I guess I wanted to start with saying, money in a way does make the world go round. But I think deeper than that, what we need to understand and really accept is that your roles as these financial decision makers is just such a fundamental role in the sustainability movement, in the climate change response transition, because without making those correct decisions, without assigning money in the right way or taking the right risk measures, or assessing where can we make better decisions around the business expansion or diversification or growth or whatever it is, we can't set aside the right financial stability into our economy in order to essentially tackle climate change, or more than tackle it, really ease into this transition of climate change, because it's coming whether we like it or not. But it's about how can we mitigate it in the best way possible, and how can we prolong the period of the period of thriving with the current climate, because we're certainly going to get to a point where it's no longer thriving, and in some way we're going to have to survive. So this is where your decision making is so important. And I guess in 2015, when the GFC hit, and all of you, especially being the space you're in, you would know very much about that. But just to touch on that really shook things up, obviously globally, but it got the reserve banks around the world. It got all of the top reserve bank associates and the financial ministers around the world to start thinking about, why did this happen, and what are the key things we need to focus on? And climate change was one of those things, which is where the Financial Stability Board then took action towards setting up the conversations, or being involved in those conversations around ratifying the Paris Agreement. So it all sort of trickled on into this response towards climate change. So yeah, you all play a really important role in this, and as I said, I would love it for it to be interactive throughout this presentation. So please feel free to stop me along the way. These are some of the topics that we're going to be covering today, which is really to talk about what are the impacts on financial stability because of the fact that the climate is changing. What are the ESG frameworks that are out there? Really, just the basics around ESG. And how are those regulatory systems changing, or how are they starting to consolidate, and where are they placing their focus? And then we'll get into how your business can start to take some actions, and that will be leading to those steps of first the materiality impacts, then looking at data systems and how we can create a more integrated data system, and then finally, how do we combine that with a ongoing roadmap development, an accountable, actionable roadmap that really takes you forward on your sustainability journey. So we'll get right into it. And I guess what I first wanted to talk about, as I said, is those actual impacts on the financial stability through climate change. And it probably starts with who is impacted by climate change to start with. And it's really these big decision makers, or the peak bodies around the movement of money and I guess the stability of our economic system. And so that's really these insurers, the banks, the superannuations, and managed funds. They're the ones that really have to start looking at this very closely. And some of them are taking very proactive steps in analyzing the market, doing price and value assets and loan security analysis, climate change analysis. And they're starting to look at what does it look like over the next 5 years, 10 years, 25 years, and what kind of impacts is the growth of the population and the changes to the economy, along with the impacts of climate change. What does that look like? And how do we continue to support a thriving human existence rather than one where we're trying to really just survive and get through it? And so this is where these banks are starting to change the way, or these financiers are starting to change the way that they allow money to move through the system. They, lend to individuals or businesses. They're starting to change the way they do this. And of course, we'll see it as well in the insurance premiums that are going up so rapidly. And of course, the multiple price hikes that we've had through inflation and interest rates and so on. And that's really, a lot of it is to do with the way the entire global economy is thinking about the financial impacts of climate change. And some of the banks are really closely thinking about what frameworks can we lean on to start improving the way that we make these decisions. Because the impacts that it will have on businesses, if we're not thinking about this earlier on, is the fact that there's going to be a lack of resources available to support our supply chain, to support the demands of our communities and our stakeholders, is going to, of course, impact the business economy, and it's going to impact the employees, and of course the employers and your various stakeholders, investors, or boards if you have those in place as well. And so all of those impacts through resource scarcity, the transportation of goods, the movement of goods, the infrastructure that's in place, all of these things will of course start to impact the way your business operates. And it really then moves to that balance between, does your business continue to thrive because it's put in those clear resilience measures around financial stability, it's put in those de-risking strategies, or does your business just move into a mode of really surviving? And that's what we want to avoid. And that's why, of course, the government needs to take action, but it's also about you guys as the individual decision makers to start to drive these conversations and see what is the best next step for your business. So what I wanted to talk about is the frameworks that are in place to help businesses start to think about this. And, we've heard the term ESG. It's an evolving concept still, because it's just one of those things. Sustainability isn't stationary. I mean, the word itself, the definition has changed so much over the last 50 years because there isn't just one way to look at it. And everybody thinks about different things when they think about ESG itself. And ESG really just creates you could say like a solidified structure around the idea of sustainability, where it looks at the pillars of sustainability, such as human, social, economic, and environment. And so what we need to do is really kind of filter through all of the noise, because if you've had a look at this space, there are a lot of ESG frameworks out there at the moment. I think there's anywhere around over 600 around the world. And so, of course, there's a lot of noise in the market. And so it's about thinking about which one should we be using or leaning on for support. And I guess what we can say, and then I'll show you this in the next slide, but the ISSB is becoming the most, not the most recognized, but the most relied upon framework And the way the ISSB works is, rather than trying to create a whole brand new wheel, because what's the point? The wheel's been created multiple times. They're really just trying to bring together a better version of a consolidated wheel, right? With all of the designs that have been in place, all of the different frameworks that are around. They're creating MOUs and agreements with all of the different frameworks to establish a unified way of looking at ESG. And Australia is talking about this very actively. There's a draft already in place, and I think it may have been closed now, I'm not sure, but the opportunity for people to comment and provide feedback on the way the ISSB should really expand into the Australian economy is what we're currently seeing happening in government. And so it's obviously coming, and it's coming very quickly. And it will certainly impact the biggest businesses first, you know, the $50 million plus businesses. They're the ones who have to immediately report. But even in the next 2 to 3 years, the roadmap for them implementing that down into the SME space, which is the bulk of our business economy, not just in Australia, but around the world, SMEs make up the most. And so they are going to be very quickly involved in and mandated under ISSB to start reporting. So even I think businesses for 5 million plus will need to start reporting. I hope I got that number right, but 5 million plus in the next 3 years. So it's coming, and it's coming very soon. And so really it's such a important thing to look at. And I guess because it's so complicated and because it's so dynamic, the entire ESG market, rather than being overwhelmed by it, because it is easy to be overwhelmed by it, I think the one thing I always say is start the conversation. Just reach out to the experts, or the ones, whether they're in your business or outside of your business, reach out to them and just start having that conversation and see what is that first step that we can take as a business based on what we've done already. And so the way that, you know, ESG really supports financial stability is about de-risking your supply chain and essentially building a more resilient operational framework. It's about stabilizing the business and really embedding the economic, the social issues into a roadmap of action, and creating a space for innovative financial performance. Because if we can support more innovations, and our business or businesses can be the ones that are supporting innovations in terms of responding to climate change, then not only are we, you know, seen as thought leaders and pioneers in the market, but we're also then leveraging up the time and the capacity to take the best next step rather than trying to figure it all out individually. So it's an opportunity to really just bring forward-thinking solutions as well to the economy, or especially in the particular industry that you operate in. I'm going to pause for a little to ask if there's any questions at the moment. Anna, you can let me know if it comes up in the chat.
Yes, will do. Thank you.
Okay. So essentially, as I said, there are a lot of frameworks out there, and at the moment, some of the ones that you may have come across would be the GRI, which is the Global Reporting Initiative, SASB, which is now actually consolidated into the Integrated Reporting Framework, or the Value Reporting Framework, sorry. There's the TCFD and the TNFD, which really go hand in hand, and they're very much directly related to many of you in your roles, because the TCFD, TNFD, it stands for the Task Force on Climate-Related Financial Disclosure, and the TNFD is on nature-related financial disclosure. So they're basically, the idea there is, how can we adopt a financial framework that considers climate risk in the case of the TCFD? In the case of the TNFD is, how can we consider financial risk in the context of natural capital and natural resources, and not just their availability, but the way that we use it, the way that we regenerate the land. And a lot of the big banking and financial institutions are looking at these frameworks very actively. I know there's conversations, and definitely the top 4 banks and definitely the top 4 consulting firms about how can they adopt these frameworks and get their clients as well on board. So yeah, if you haven't heard of these ones, these are really good ones to actually just look into a little bit more. So essentially what they help you do, all of these frameworks, they take the approach differently based on whether they're looking at the impacts or whether they're looking at risk or whether they're looking at financial stability. All of them ultimately get to the same thing, which is how can we focus on ethics and integrity in our business? How can we secure our supply chain, create resilience, build transparency, or embed transparency into our entire business? And how do we transition the entire workforce as the way that we do work, the way that we interact in business? It's all changing. And of course, how do we empower our First Nations, the ones who really bring such a important element to the conversation of climate change, circular economy, and so on? And how do we work with the changes in politics as well, which is obviously both a risk as well to our business, but at the same time, the opportunity to leverage the support that regulations can provide as well. So it's really about watching the regulatory landscape and watching all of the changes that are happening around the market. And one of those biggest things, as I kind of mentioned before, is how all of these frameworks are now starting to consolidate. So this image is really a good one, and feel free to take a screenshot of that. I mean, I will of course share the final copy of the slides as well, Anna. So you're welcome to share that with the group if that's requested. But this one's a really good slide just to see how all of these different frameworks are now starting to come in and consolidate together. And this might even be outdated by this point because I think I got this image maybe 6 months, 4 months ago. But yeah, certainly changing really quickly, and really the IFRS are the ones that are driving this conversation around creating a consolidated system, which is the ISSB. So the ISSB is the International Sustainability Standards Board, but the IFRS is also doing this through the IASB, which is the International Accounting Standards Board, because accounting reporting has been, well, financial reporting has been around for a long time, and now sustainability reporting is coming to the forefront. And so this is about creating a unified structured system that looks at both financial metrics as well as non-financial around climate change. So that's really what's happening here. Does anybody have any thoughts about this or questions about this? You can, I don't know whether people are just going to unmute and talk or whether it's just going to come through the chat box. Is that how you normally do that, Anna?
Normally we use the chat box, yeah, and yeah, we haven't got any questions yet.
No problem at all. So I guess the question is, where do you start, right? Where does your business start? And what we tend to do with clients that we work with is really an entire ESG framework and roadmap, and that is usually like a 10-step process. It's quite a comprehensive modular process, but the first few steps, this just really critical in terms of understanding not just your baseline from the perspective of having someone come in, look at your business, write some data down and say this is your baseline, because it's more than just a kind of technical baseline that we're trying to establish. We're really trying to understand what are the actual issues that, not just from a technical operational perspective, but from a people perspective, what are the key issues in your business? So you may have heard this term before, but materiality assessments are really the starting point for any ESG framework. And so that's what is always the first recommended step, is determine what your material issues are within your business. And better than not is to align the way that you do the materiality analysis with the framework, i.e. the ESG framework that you're looking to report to. So if you're looking to report to the GRI, then you would develop the materiality process, looking at the environmental, the social, and the governance areas that directly impact your business. And so the way that you would do a materiality assessment is usually through setting up surveys, online surveys where it's non-interactive, and interactive focus groups or workshops where you can actually talk to people and then dive into issues more deeply. Also, there's a different way that people respond when they have a survey in front of them as opposed to when they're actually having that conversation with you, and the level of honesty or the level of openness and awareness and all of those things changes. So you get a good, if you really create a dynamic materiality process, then you can get a good representation across your business, across your different stakeholders. And that's not just internal stakeholders. We're not just talking about the employees within your business, but also how do we, not how do we, but can we talk to also the supply chain or key suppliers, your investors, maybe it's your board, maybe it's employees at different levels. So how do we talk to the different stakeholder groups? And maybe in some instances, it's worthwhile consolidating the groups and having a bit of a combined representative group to do a focus workshop with. So it really just depends on what you think is most important, but who is most important to speak to essentially is part of this process. And it really then gets you to understand what these stakeholders see as the biggest impacts on your OPEX and your CAPEX, essentially, because of the outcomes that come through those conversations. And a lot of the data will be, or the information will actually be qualitative rather than quantitative. And the survey comes in to help with the quantitative side of the data, but the qualitative data is where the real value is in a materiality analysis. So that's the first step. And the next one is, often we have so much data. I know even if you just pick up your phone, I'm sure if you actually if it had a weight to it in terms of data, you wouldn't be able to pick up your phone anymore because there's just so much free-flowing, unstructured data. And that's, we're talking about my phone, but what about if we talk about a business? It's, of course, enormous the amount of data that we're capturing and not actually using it in a proper way. And sometimes we're not even capturing it, so we don't have awareness, and therefore we don't make better decisions in our business. So actually assessing your data, not just the infrastructure, but the entire process of analysis and feedback systems that you have in your business through the data capture, analysis, and feedback, and therefore action, that needs to be looked at and assessed. And often I think both of these things, or really the entire thing, is always done in the best way possible when you bring someone external into the business. Not because internally it can't be done. It can certainly be done. You're the experts for your business. You know your business, from the inside out. But having someone come in from the outside in gives you a more objective view, and they can come in away from the embedded culture that's already in the business, and probably the embedded biases as well that are often there with that culture. So this is where I would suggest is always the best way to start is doing the materiality analysis, and then assessing your data, and then continue building from there. That's really the next step. So this is step one, to understand what are the materiality impacts in your business. And each framework, each ESG framework that I was talking about earlier, they certainly have their own way of looking at things. So the GRI might look at social impacts differently to say, what I'm trying to get at is the material issues that the GRI places importance on would be different to say the material impacts that the value reporting framework might place importance on. And the way that they place importance is also different. The way that they measure it, the way that they analyze the resulting impact is different. And so this is important at this stage before you really choose step one. You get into step one, is to select the framework that you'd like to report on. Given that you're all in Australia, or most of you, I believe, are in Australia and operating in Australia, then the best way to do this would be to look at the ISSB, and then look at the resulting ISSB MOU or agreement that is in place for the framework that you're looking to report on. Because ISSB, for example, if you're wanting to report under the TCFD, there are, I think 2 versions depending on the best perspective for your business. There are 2 versions of which TCFD framework, or not framework, but approach to thinking you want to select. And so you would pick the one that's best related to your business. And then you would start doing your materiality analysis. And from that, you'll see, just from this diagram, that the impacts that you'll start to identify are obviously around legislation and regulatory compliance. From the environmental perspective, it looks at, what are the acts that will impact your business, or what is the actual policy and mandate in place at the moment? How is it being monitored? And what impacts does that have on your business in terms of not just basic compliance, but what is going to come into the future as well, and what do you need to start thinking about? From the social perspective, modern slavery, social responsibility laws around diversity, equity, inclusion. But deeper than that is also about, how do we interact with our people better? That's both our employees and our customers and clients and our community. For example, a wind farm client, they would do this materiality process and then talk to the communities that they're going to develop into, and understand what are their issues with, say, the development of the wind farm, or what are the impacts on that natural habitat that might also have an impact on that community and maybe their economic value, and therefore their own livelihood. So there's much deeper elements to this, but just to kind of cover it broadly, I've just put in a few terms in there for you to understand the social impact. And that also definitely includes very direct human impact, because employees, they're individuals, and I mean, everyone's an individual, but with the employees, when we look at the interaction of your business with your employees, do they feel bought into your business value and your vision and the way the business is heading? And are they vouching for your business in every conversation? Similarly, are your customers vouching for your business in every conversation? Adding to that level of individuality, an individual person can actually take businesses to court as well around their lack of climate diligence. And so the social and human buying power, buying power may not be the right term, but their power basically in the economy and the stability of your business is great. And in Australia, it's certainly starting to increase, where more and more individuals are taking businesses to, taking them to court essentially because of the lack of climate diligence in their business and in their operations, in their supply chain. And so individuals have a lot of power in this entire kind of process. And so considering the social impact, the human impact, is a really fundamental role in terms of financial stability, because of course, all of these things that I've mentioned, they lead to a lack of financial stability if not done properly or not addressed properly. And I guess governance, which this is a funny thing about ESG, it's ESG, environmental social governance, but really the entire thing is a governance framework. So although it sits within the acronym of the term, governance is the thing that we're trying to establish, and we're trying to establish in a way that considers the environmental impacts and the social impacts, and therefore the financial impacts on our business. So having a clear governance structure where there is accountability, there's transparency, and there is improved decision making with clear feedback loops, because your data is working for you, is very important in this entire materiality process. So that's the areas that a materiality impact analysis can really start to dig up for your business and start to help you understand a bit better. And more importantly, not just understand better, but also direct your efforts better, because sometimes you might think, I'm definitely going to put solar panels on the roof. That's going to solve our energy problems. But you might find from the materiality discussion that actually maybe the renewable choice for energy supply is not the best option for your business. So that's really, sorry, my son has walked in. That's okay, no problem. So that's really the opportunity that you have as a business to identify what is the most important issues, not just for your business to address the financial impacts, but also what's most important to the people that essentially help run your business, the ones that you lean on, which is your stakeholders. And so in terms of data, there's obviously a lot of data out there, and in order to capture all of this that I've put up on the slide is a challenge. And in order to capture it effectively in a way that helps feed back into your understanding and the way that you make decisions is quite a lot. And so it's about just starting somewhere, and often you can start with the way that you're capturing, say, energy data, or the way that you're capturing energy and resources, and then build that out to carbon, and then build that out further to waste, and so on. I'm just talking from an environmental perspective, but I guess the same can be applied to social impact and governance impact. You can start to look at one area, capture the data correctly, and then slowly start to do the same with the others. And what I mean by that is, right now, if a business was asked, what was your carbon footprint last year? And then how did it change this year and why? Many businesses will not be able to answer that, and that's because they don't have the right data systems in place. And then what would that mean for your business in the way that the world is changing, not just the national economy, but the global economy, and the way that it's changing with this idea of a more circular, regenerative, distributive economy. And if you don't know what I mean by those terms, it's good to look up the Ellen MacArthur Foundation and their concept of the circular economy, as well as Kate Raworth and her concept of the donut economy, because they're economic models or economic systems of thinking that really show us how can we think about climate change and how can we respond to it in a way that is supporting a more regenerative environment and a distributive economy where everybody has equity. So I lost my train of thought now getting into those particular concepts, but I guess what I was getting at is no, I don't remember. That's okay. What I can say anyways in conclusion about this slide is it's just really important to ensure that you're starting to capture the data, and even if it means starting somewhere small, you can make better informed decisions about whether you do go ahead and renew your energy contract with a particular energy supplier, or whether you do assign more water consumption to a particular process in your manufacturing. Or if it's not a manufacturing business, it might be around whether you do allocate funds to certain types of employee building programs, or whether you actually use those funds to support a specific and very relevant and probably most important community program that your stakeholders have said, this is the thing we need to focus on. So this is the whole part where now your materiality analysis and the opinions of your stakeholders, obviously within the right context, starts to impact the way that you then take this step, which is around capturing the right data and using that data for operating your business in a better way. So any thoughts, questions so far?
Hi, Mary.
Hi. Hi, Jane.
One question. So for all these kind of things, is just disclosing, in our financial report. In the beginning, you have some, direct reports. Then you have some, P&L. That's won't impact that section. It's only at the later part of a financial report, they have like a notes section. So in that section, which in future depends, your company size. Maybe if you're more than 50 million revenue, you have to disclose in next financial year for all those kind of things. For small business, maybe you got 1 or 2 more year. Is that right? Just disclosure for the financial disclosure purpose won't change any actual balance sheet and the profit loss of those kind of section. Is that right?
Yeah, because there's no mandate at the moment. So for your actual financial reporting, most of the businesses in Australia are not mandated to do it yet. Even the large businesses are not mandated to do it yet. But many businesses, not just large ones, but even the small and medium-sized businesses who recognize that this is not going away, ESG is not going away, And so in order to respond to that better, how do we start to put in the systems in place now? Because it will certainly take you at least 2 to 3 years to properly establish all of these things that I've been talking about, which is, assessing the material issues, analyzing where you're capturing data, and starting to use that data in an effective way to make better decisions around the E, the S, and the G. So yeah, it's definitely not mandated yet, Jane. It's not required, but I guess this is the question that you guys have to ask yourselves as part of the decision-making element to your business is, do you want to play catch up, or do you want to set yourselves up now? And that's where you really have an opportunity now. That being said, we're already late to the table in really, from a climate change perspective, Australia is very late to the table. But what's happening now, which is really positive to see, is one, this big conversation around the ISSB and the rollout of the ISSB, but also not just 2, but 2, 3, 4, 5, and 6 is there's so many things starting to change in the economy, which is there's pressure from buyers for businesses to be doing the right thing. There is buy-in from your employees who want to stay with your business when they see that their values align with what you're doing. There's supply chains and supply chains that are being impacted by mega or big projects that are saying you need to be looking at this area or that area or all the areas of sustainability. So that's just to name a few, but there's pressures coming in from all sorts of places for businesses to start thinking about this. So I guess, it leads back to that question. Do you want to play catch up, or do you want to get ready now?
Right. I got it. Thank you.
Thanks, Jane. If there's nobody else, I might just continue. So I guess this is just to highlight the 10 steps. This is the 10 steps of building out essentially an effective ESG framework into your business. The steps that I mentioned earlier that we tend to take with clients. These will vary definitely for each business. Some might not be, most of them will be relevant in some capacity for your business, but maybe the way that we do it will change, or the capacity in which we do it will change. But essentially, you start off with setting a boundary, of course, of what it is that's most important to consider within this process of developing an ESG framework. And then we do the materiality analysis and establish what is the baseline of your business operations. And then we move on to setting up the policy system, because sometimes you'll have policies already, or sometimes you might not have many policies or any policies. So it's about setting up the policy framework in your business. And that, if say you've selected GRI, for example, to be your reporting framework of choice, at this point when we develop the policies, we'll also develop something called a direct management approach, which is essentially GRI's way of connecting the policies with the GRI framework, and therefore the resulting action that you take as a business. So all of this sort of is guided, of course, by which framework you decide to start reporting on. And then the next step is, where does your business want to go? So what does the next 1 year, 2 year, 3 years of success look like for your business? And so that's when we get to start benchmarking and creating an idea of what is not just best practice, but what is most important to us, and what's the relevant metrics to measure as a result of where we see success. And that's really module 4. And then we move on to module 5. If you're also wanting to take that next step or that extra step, and also an important step, is where is the market? Mapping the market. Maybe this means a technology map of if your business is a very tech-heavy company. So maybe it's mapping the technology or mapping the material flows, just mapping the way that the market is shifting around your particular industry and what impacts it has for your business. And then basically for steps 1 to 5, we have a clear idea of where you are now and where do you want to go. And so that's when we lead to step 6, which is, what is that gap? What is that ESG gap? Analyzing that gap that will help us then build a roadmap for the next 3 years. And we often say 3 years because, as I said, sustainability, ESG, all of these things, they're just changing so quickly all the time. What it means to be sustainable, what it means to have an ESG framework in place is changing all the time, which is why businesses report every year, which is why governments and leaders meet so frequently to talk about this space because it is always changing. So 3 years is a perfect amount of time to really, well, it's an ideal amount of time to set up a roadmap. And of course, with the right feedback systems, you'll ensure that you change things that need to be changed or addressed in your existing roadmap. And so once we've done all that, we want to make sure that we then build accountability and build the capacity and capability into your business. So, you know, who is going to lead these projects? Who is going to manage the projects? Who's going to implement the projects? And of course, as well, you know, what does that KPI structure look like? Because it does often have to sit with the CEO, the C-suite, because ultimately they're the ones that are fundamentally responsible for the direction of the business and whether the business is succeeding down this ESG pathway or whether they're failing. And even if they're failing, that's okay. The feedback loops give you an opportunity to then improve. So that's what this capacity building and accountability is really about, is putting accountability and responsibility really where it should go. And then, yeah, we move on to reporting and disclosing on the outcomes in a structured way, in a verified way. And then finally consolidating the entire learnings and everything into a standard procedure within the business, or a standard operating procedure that tells us exactly for different areas or different business units or different topics, what are we supposed to be doing? How should we show up, and how do we act as a business and a collective? So yeah, these are the steps. Anybody have any thoughts? Because there's a lot there to digest. Any questions about that?
No, I can't see much in the chat at the moment. Yeah, unless someone in the group has a question.
Yeah, I noticed some Singapore and Malaysia company, they already sort of one step ahead. They actually, in their financial report, they have a lot, sometimes 50 pages talking about the environment, those kind of thing. But in terms of Australia, in your opinion, like which listed company is the best example, you know, running at the front line now, actually adopt this kind of ESG reporting, you know, module?
Well, I mean, IKEA, even though we can't claim them as our Australian owned business, it's certainly a really good example. Because IKEA, the beauty about IKEA is, and I know because I'm speaking to IKEA even around the world, and all of them need to be doing the same thing. All of them need to be thinking about sustainability at the level that Sweden has set up. So HQ and their mandate rolls out to every single IKEA. So IKEA is a really good example of that.
Okay.
There's Alsco. Alsco is a great company who is a linen company, and they're certainly, you know, looking at ESG very actively. There's certainly businesses out there that are looking at it, but these are, you know, some of the bigger businesses that are looking at it. But I know even from my experience, I've worked with just recently a relatively small architectural firm, let's say about 50, 60 people big. And then I even worked with a even smaller sleep solutions company that are 4 people. So there's businesses of various sizes looking at this. And this is why I always feel like there's no reason to wait. And if you have businesses of 2, 3, 4 people looking at this versus businesses of tens of thousands also looking at this, then really there's no exclusion around this. Like, it's going to impact everybody. Everybody's part of the supply chain in some way. Everybody's part of the financial model of our country and our global economy. So we all need to be thinking about this.
Yeah, sure.
Sorry, it's always a long-winded way that I answer, but I get there in the end.
Thank you. Very detailed.
Oh, thanks, Jane. Thanks for your questions. So I might move to the next. Oh, did someone have a? No, that's okay. So really, yeah, it leads to what I was saying before, which is, you know, what are we waiting for? Like, let's do this now. Let's start to take the steps. At least start with step one, or even before that, start with the pre-step, which is just have the conversation with the experts, the subject matter expertise. They're the ones who will know, and they'll be able to just open up new ideas for you. And then you, as a person in your roles where money is being managed and controlled in some way, take it on as a responsibility for yourselves to drive this conversation within your business and drive it with the key decision makers. Because even when you don't have a role that has, I don't know, sustainability or ESG or circular economy in it, it doesn't matter. It's about everybody getting on board and everybody buying into the idea. And so it really starts with yourselves who are in this room, because you guys are a part of the key decision making in your business. So yeah, in terms of the next slides, they're really more appendices that I'm happy to share with you. And really it's just case study, shared a case study. I've shared a bit more about ESG trends, the materiality process that you can look at, and how we analyze the data, and then, integrated data capturing. So I wanted to I want to share these slides with you, so I won't really hold it on those slides too much. Unless you want to look at a particular slide right now, let me know. But yeah, I really want to thank you all for taking your time to be here with me today. And thanks, Anna.
Thank you, Mary.
Thank you, Meryl. Thank you very much. Yep. So are there any more questions? Is there anything that you would like to ask Meryl? Feel free to pop in the chat or take yourself off mute or raise your hand. Well, I don't think there is a queue there.
I just have one. Sorry, Anna. Just on a personal note, I am quite interested in this area. What sort of education opportunities are there for accountants to learn about this in more detail? Do you have any recommendations?
Yeah, so I don't know all, and Lee, this is a really great question. I don't know the exact answer to that, because I don't know about the financial related programs that are out there, but I would look at Cambridge University online. That's a really good place to look at, because they have some really great courses around sustainability, and it's online. But the other place to look at is probably one of these frameworks. So the TCFD, which is the Financial Framework on Climate impacts, or the TNFD if you're more focused on nature related impacts. They're probably good places to start, because they're also like their financial frameworks essentially that look at this very closely. But essentially, if you did a course even just under any of the major ESG frameworks, I think you would get a very good exposure, not just to the financial side of things, but obviously very closely to the environmental, climate side of things and the people side of things. So, which is all connected. It's all connected. So it's just a matter of, do you want something that's more skewed towards the financial side of things, or are you wanting something that will give you, I guess, a holistic view of what is important to know in terms of ESG?
A holistic view for me personally. I don't really want to continue crunching the numbers and sort of looking at a career pivot into this area. But obviously I don't have the education yet, and was just wondering what sort of avenues I need to start to progress to be able to look at this and professionally look at it in the future.
Yeah, no, and I would definitely consider then one of the more sort of broader ESG frameworks, and probably the slide where, and as I said, I will share it so you'll see, but the slide with all of the ESG frameworks on there, just probably have a quick look into those. But certainly the GRI and the integrated reporting, I keep saying that, but the value reporting framework and ISSB, they're just the places to look there. But everybody has different thoughts on what's most important, but they're just the ones that have biggest traction in the market.
Thank you. That's good.
My pleasure.
Great question. Thank you, Lee.
Anyone else have any questions?
I'm quite interesting to know, how do you judge materialism? Can you give an example? How is a material? Is it in terms of percentage of your revenue, or in terms of what sort of, how do you judge it? This kind of, is materialism. Otherwise not. That's the first step, right?
Yeah, definitely. And I guess that would lead to this slide is this is one way to look at it. There's different ways to assess the data. And of course, this is just a singular perspective on how we would analyze the data. But basically, first, if we look at this slide and we assess all of these, this one in particular is based on the GRI framework. And so if we look at all of the relevant economic, environmental, and social topics that sit under the GRI standards, and then through the materiality data capture questioning process, gathering the right information about which is the most important material issues, the the analysis process will then look something like this. And of course, as I said, there's going to be different layers of analysis, but essentially you'd start to look at the impacts that are most important to your stakeholders, both externally and internally. And then you start to find a cluster of what should be the most important area of focus for your business.
Yeah, that's good. But I saw your slider, you put the dollar value. So do you actually need to interpret it in dollar value after you decide this is a material item?
Yes. So, it's a good question. I guess I should have expected that from a group like this. So the reason I put the dollar sign is to show that there's financial flows through all of these areas. That was really my intention. But it's a good question that you're asking. In terms of a dollar value, I think that will change for individual businesses. So for example, I think if I'm understanding you correctly, Jane, is if, say, you use $100,000 for your electricity bills every year, and then you find energy related, so specifically around energy use, therefore, i.e. your energy bills, you find the material topics impacts, a good 40% of that energy bill, then I think that would be more of a subjective thing of deciding then, okay, well, this is most important for us to focus on. And of course, you would also compare that with, say, your other material topics. So it's not a straightforward answer, because we'd have to look at all of the areas that are material to your business and then decide based on that, as well as based on maybe the financial impacts that are probably going to result from these material issues. So there's not one set dollar value, or there's not one set percentage, but going by that initial example, is if 40% of your energy consumption is being impacted by the material issues that your business is not currently looking at, then you probably focus on that. It seems pretty important.
Got it. Thank you.
That's why this process, and whoever you do speak to, if you do end up having these conversations, is make sure that you're always, you guys as the decision makers, but also as the business experts, the ones who know the business very well, you need to be involved throughout those steps that I showed you earlier. Whatever the steps look like that you engage in, you need to be involved throughout the process, where you're involved at the beginning, of the materiality analysis, in the middle, and at the end. So not just at the end that you get a report that's based on what the expert or consultant thinks is right, but also based on what feedback you've provided in the process.
Good point. Thank you.
Thanks, Jane.
Effie has commented, she's saying, thank you, I need to start reading up on the subject. Yeah, I can see how this conversation has kind of sparked and renewed interest in the topic, because the topic is not new by any means, but at the same time, I feel that it's kind of fallen into the background. The few new and emerging issues have come to the forefront, and having this type of conversations is certainly useful, particularly for the people who are involved in reporting, and the reporting requirements are expanding every year. If I hope if it doesn't mind, if he's working for the local government, and the reason I know, because I used to work with the same organization and local governments, and we have a few members in the group who are still working for different local government organizations, and they're heavily involved in this kind of topics. Yeah,
they are.
Mm.
Many of the local governments have also, and if maybe your government has as well, but they've declared a climate emergency. So there's just sort of no going back now to commitment, either whether it's out to 2030 or 2050. They've all not all, but most of them have declared climate emergencies.
That's
which
right.
is really good. Yeah.
If you're saying yes, a very valid topic for local government.
Definitely. But also a really challenging one, because especially around the social impacts. And just from speaking from my perspective, I'm in the Kingston Council area. And I know I'm in a group that, we talk to the local government, or like Kingston Council, quite a bit about the climate emergency that they've declared, in which we played a role in as well, and just about the fact that we need to really speak to the people. And this is what that materiality analysis is similar to, is like speaking to the people, understanding what are their issues, because you might not directly relate it to climate change, but it absolutely is. Just the fact that, say, even just in my area, there's spots along the train lines that are super dangerous because there's not enough pedestrian access, or proper pedestrian access, and access for bikers, like cyclists, to be able to cycle. And so how does that relate to climate change? Well, there's less people therefore choosing to cycle to work and choosing to drive instead because it's safer, or walking their children to school because it's safer to drive. And so what does that mean? That's obviously more carbon emissions into the environment. So all of these things, they're connected.
And just on that topic, sometimes I feel that we really need to open our mind and start looking outside of the proverbial square when we look at these issues, because the quite often there are unintended consequences of our action, while the intent is absolutely positive. And I like how you mentioned the impact of the wind farming businesses on the natural habitat. So it's a positive contribution in one area of the society, but at the same time it may be harming the other side. Or what else came up to mind, and this is something that I was very surprised to find out, and I never thought of it this way. So how we've been focusing on going paperless, and of course we have progressed a lot in this space, but what has come out on the back of it is that the data management centers, they are super big contributors to the climate change, and because of the energy, what do you call it, and carbon emission, or whatever that is. Mind you, I'm not that I don't have a lot of knowledge in this space, but these examples, they just tell me how narrow we look at certain issues sometimes, and having this broader outlook on things without getting bogged down in the complexity and giving up on it completely, like, oh, it's too hard basket. So it's I feel that finding the right balance between the complexity and at the same time not being too narrow focused, I suppose that's where that fine equilibrium is probably required.
Yeah, it's interesting, because even on the data centers one, if there's anything each of you go away from and take away from this and go and do, is just go and empty out your emails, because so much of emails are stored unnecessarily, and that contributes heavily to those data storage systems. But to add to what you were saying as well, Anna, just like on a bit of a spiritual level, we're all connected, and consciously we're all part of the same system. And so just based on that fact, if we can connect in some way with each other on a deeper level, then this becomes no longer a difficult mountain that we need to climb, because we realize and recognize that, you know, all of our actions, every single action that we take, even just buying a tomato, has an impact on the environment, therefore has an impact on somebody you're probably never going to meet. But if we talk about humanity here, this is what humanity is about connecting with each other, regardless of race, creed, location, you know, all of those